Good morning. It's Tuesday, September 23rd. I'd like to call the Audit Committee meeting to order. I'd like to acknowledge we are in Mi'kma'ki, the traditional territory of the Mi'kmaq people. Sorry about that. So we need an approval of the agenda as circulated. Councillor Bell, seconder. Councillor Burns. All those in favor? Motion's passed unanimously. So as we don't look for approval of the minutes, they have been circulated. Are there any errors or omissions in the minutes? For July 8th, 2025. Okay, hearing none, minutes are accepted. So we will move right into it. This morning we have Paul Beliveau with us, and he will review the management letter and the internal control letter. So we're right at you.
Morning, everyone, and thanks for the opportunity to have us provide our services to the municipality. I know a number of the faces around the table, but there's also some faces I don't recognize, but anyhow, thank you very much. The management letter and the internal control letters are basically two letters that we issue, as well as the audit reports. And with respect to the management letter, the key points, and I think you have copies of the management letter. So the key point in the management letter is, number one, we haven't detected any fraud, and management have advised us that they're not aware of any fraud either. Like, that's a key component these days when people are dealing with audits and due diligence and review of financial statements and things like that. So and in the management letter, it just basically touches on as well the fact that in April 1 of 2026, there'll be a revision to the presentation of financial statements. So, Elena and her staff and Michael have been working towards that. So that'll be coming in next year. So it's, I think the accounting people really like to make changes, and they think they're always doing a better job at presentation. So that'll be coming in next year. And so in the management letter, the key point is that there's no effective fraud that we've been aware of, and it just outlines some other the purpose of our presentation work. With respect to the internal control letter, again, it's just a minor thing, but we've disclosed that there was a very change in the system that was for cash and check issuing and things like that, dealing with the cash and reconciliation of cash and bank accounts. And that's been all handled by management. So it's just a disclosure about what was found to be and then how it was fixed up, and everything is okay. And
It was just an initiative. We didn't have anything wrong, I don't think.
No, but it's just outlining that. And so there's no significant things to cause alarm for anything. And again, as well, we'd like to thank staff for when we were doing the audit. They're very, very professional, and they're great to deal with. So I'd like to thank them for the work that they did in preparing for the audit, and it went along quite well. As you can imagine, I wasn't involved in the day-to-day audit. They don't let me out to do that anymore, but anyhow, but everything went well. The primary purpose of our role is to issue audit reports on your financial statements. And with respect to the municipality, there's two audit reports that are issued. One would be for the consolidated affairs of the modal, and then the second is for the trust funds. And I'm pleased to say that both audit reports are what we call a clean opinion, and that there's no cause for concern for us for issuing a report on your financial wellness and the presentation of the financial statements. So it's a long report. It outlines a lot of ifs, ands, or buts in it, but the key point is that the basis of opinion, we conducted our audit in accordance with Canadian generally accepted accounting standards, and that the paragraph preceding that is that our opinion is good. And that would be for both the consolidated and the trust fund. And I think with respect to the reports, again, you have those reports, I believe, in front of you. And I don't think I'll bore you with the details of reading the report. And I guess that would be it.
Okay. Do we have any questions for Mr. Beliveau? Concerns, comments? Pretty easy group this morning. Okay, thank you very much. We'll move down to the treasurer's financial statement report, and Elena Wenzel, please.
Yes, thank you, Councillor Hubley, and members of council this morning, Mayor and Council. I do have a report. It is in the form of a slideshow, so if we can bring that up, then we can go through it. And what I've done in the treasurer report this year, I've kind of expanded it, kind of built on the training that you all had about financial statements, and hoping that perhaps it'll give you a better idea of how we do them, why we do them, and what's contained in them. So municipal financial statements report on financial activities and balances. They help ensure accountability, transparency, and assist municipalities with long-term and financial planning. Financial statements are an important tool for municipal council and administration to use to report to the taxpayers on the municipal services provided with the resources at their disposal. The Financial Accounting and Reporting Manual, the FRAM, you'll hear us talk about that a lot, is a legislative authority of the Municipal Government Act and requires that every Nova Scotia municipality prepare annual audited financial statements. Each municipality provides a copy to the Department of Municipal Affairs when the municipality submits its annual financial information return, the FIR, to the department. According to the Chartered Professional Accountant, CPA Canada, municipal financial statements must be prepared in accordance with generally accepted accounting principles for local governments as recommended by CPA Canada, which is the PSAB, Public Sector Accounting Board. Requirements for municipal financial reporting are standardized across Canada and are set out in our Public Sector Accounting Handbook. Municipal financial statements are prepared using the net financial assets or net debt model and must include the reporting of tangible capital assets. This approach provides a more complete picture of a municipality's financial condition. Financial statements provide information on a municipality's financial activities, balances for the financial period. Financial statements also provide information on municipality's financial position in terms of its assets and liabilities, its net financial resources, which they call net debt, accumulated surplus or deficit, and its tangible capital assets and other non-financial assets. Financial statements reflect the outcome of activities that create revenue and incur expenses to determine whether the municipality operated in a surplus or a deficit for that period. Financial statements also provide a meaningful summary of the sources, allocation, and consumption of municipal economic resources, how the activities of the period have affected the municipality's net debt, how municipal activities were financed, and how cash requirements were met. As Mr. Beliveau did allude to, a new conceptual framework was issued in the CPA Canada Public Sector Accounting Handbook on December 1st, 2022, which is PS 1202, the new financial presentation standard, which replaces the one we're using right now, which is 1201. And it sets out PSAB's new reporting model and was actually approved in March of 2023. Both the conceptual framework and the reporting model in section PS 1202 will be effective for the fiscal years beginning on or after April 1st, 2026. The new conceptual framework and reporting model will change the financial statement presentation as outlined in this report. Prior period amounts will need to be restated to conform to the presentation requirements for comparative municipal financial information in our statements in next year in 2027. 2027, so 2 years, I guess. The annual financial statements are prepared in accordance with Canadian standards established by PSAB. They include comparative figures from the prior year, a comparison of actual to budget results. Municipal financial statements are prepared on an accrual basis, recognizing revenues and expenses when they occur and not necessarily when they are paid. As such, they can provide insight on the cost of decisions that may not need to be funded until a future period. So there's 5 main components of the municipal financial statements of a municipality. The consolidated statement, Consolidated statement of operations is a statement on revenues, expenses, and results for a fiscal period, year, or reporting period. The consolidated statement of changes in net financial assets or net debt is a statement that explains the difference between the annual surplus or deficit and the change in net financial assets or net debt, if it was negative. Reports spending to acquire tangible capital assets and inventories of supplies, and reports the disposal of tangible capital assets and the use of inventory. The consolidated statement of cash flow is a statement that provides details on changes in cash and cash equivalents since the previous reporting period by identifying where cash came from and showing how cash was used. And the consolidated statement of remeasurement gains and losses, which actually is not applicable in our municipality, is a statement that deals with annual fluctuations in exchange rates and derivatives and things like that, which we do not have here. As well, our financial statements include specific notes, which include our accounting policies, our cash and cash equivalents, receivables, equity instruments, derivatives, and other investments, deferred revenue, employment benefit obligations, asset retirement obligations, long-term debt, tangible capital assets, commitments and contingencies, and accumulated surplus or deficit. The municipality's consolidated financial statements are the responsibility of management and have been prepared in compliance with provincial legislation and in accordance with the Canadian Public Sector accounting standards established by the Public Sector Accounting Board of CPA Canada, as previously discussed. The consolidated statements have been audited, as Mr. Beliveau indicated, by Beliveau Vino Incorporated, who have expressed their opinion that these statements present fairly in all material aspects the financial position of the municipality as at March 31st, 2025. The audited financial statements included in this reporting package are considered to be in draft until they're approved by Municipal Council. The municipality's management maintains a system of internal controls designed to provide reasonable assurance that the assets are safeguarded, transactions are properly authorized and recorded in compliance with legislative and regulatory requirements, and reliable financial information is available on a timely basis for preparation of the consolidated financial statements. These systems are monitored and evaluated by management. The following discussion refers to our specific pages in the financial statements in your agenda package. So if we look at the consolidated statement of financial position, which is actually on page 4 of your agenda package, it's a balance sheet that summarizes the financial assets and liabilities of the municipality. The statement highlights the net financial asset, which the municipality does have, it's not negative, which would be a net debt, which is the difference between the financial assets and liabilities, the investment in capital assets, and the accumulated surplus. The municipality was able to invest in assets by leveraging funding from other levels of government and using its own reserves with no capital borrowing. This results in a net financial asset on this statement, which increases the accumulated surplus. The consolidated statement of operations provides a summary of the revenues, expenditures, and surplus for the fiscal year. The statement consists of the funds for general operations, capital, and the municipality's share of both the Lunenburg County Lifestyle Center and the Municipal Joint Services Board. The consolidated statement of operations shows an annual surplus for fiscal 2025 of just over $11 million, with a budgeted surplus of $3.8 million. The variance of $7.1 million consists of the following. The non-consolidated operating fund variances, because this is consolidated, we did talk about the non-consolidated variances. So some of the things that you do see here, like accessible property taxes, a lot of that's your D-transfer tax and the amount of tax revenue that we got over and above what we had budgeted, as well as interest. When you look at that revenue section, you can see that's got to do with our interest on deposit. Anyway, when you go down farther in here, you can see a variance of just over $4 million under gas tax revenue and federal and provincial grants. And essentially what that is the Municipal Capital Growth Program funding that we got in March of 2024. Staff put it in deferred revenue. And then this year we brought it back in 24-25. Showed it as a revenue in the capital fund and a transfer to our reserves because we have to accrue interest on it. And so it needs to sit in the reserves so it can do that. And those funds will be expended on the projects that staff have applied the grant to. So the beautification for Osprey sidewalks and the Cookville wastewater treatment plant. It was just the way that the money came in, that we're not budgeting to use it, we just brought it in and then we transferred it back out. So that's why you see that big differential. And you can see that in your capital reserves on note 26 of your financial statements. The consolidated expenditure variances are actual expenses recorded versus budget. Significant variances of expenses under budget are grants, other administrative services, roads and streets, which includes those Nova Scotia Public Works paving partnerships, which we didn't pave any roads with the province last year. Planning, zoning, and economic development. Recreation and cultural services, which includes facility maintenance programs and the LCLC. Significant variances over budget. The center school liability that had to be set up per the PSAB rules, and depreciation and write-offs of capital assets. The statement of cash flows reports the change in cash by showing how the municipality financed its activities and met its cash requirements throughout the year. The operating annual surplus is affected by non-cash items like amortization, accretion, and changes in receivables, payables, and liabilities. Capital activities include the purchase and disposal of capital assets, tangible capital assets, Financing activities include acquisition and payments on long-term debt, Investing activities include investments, loans, and advances, and inventory held for sale. The consolidated statement of changes in net financial assets or net debt is required under PSAB reporting standard. Explains a change in net financial asset as a result of annual operations, transactions in tangible capital assets, and changes in other non-financial assets such as prepaid expenses and inventories. The municipality is in a strong financial position. It has increased its net financial asset by $9.4 million. I have the environmental liability here, contaminated sites and center school. This is in your notes on 7D, pages 18 and 19 of the statements. I highlighted it because under PSAB section 3260, which is the liability for contaminated sites, a liability for remediation of contaminated sites should be recognized when all of the following conditions are met as of at the financial reporting date. The environmental standard exists, the contamination exceeds the environmental standard, and the government's directly responsible or accepts responsibility. It's expected that future economic benefits will be given up, and a reasonable estimate of the amount can be made. So the fifth thing, a reasonable estimate that the amount could be made, that estimate, we just got with the ESA assessment that the engineering department did for center school, so we had an amount to attach to it. And that amount was $990,000-ish, so I set up $1 million liability to account for that, because petroleum, hydrocarbon contamination, and other hazardous material was discovered during that ESA of center school. And so the remediation just of that part is just almost $1 million. And so because that required conditions were met, we set up the $1 million liability per PSAB requirements. The audit committee must review the annual hospitality and expenses of reportable individuals. The reportable individuals are defined as the mayor, councillors, and the CAO. Remuneration and all expenses must be reported. Hospitality expenses are expenses incurred while hosting individuals from outside the municipal government for reasons of diplomacy, protocol, business development, or promotional advocacy. We don't normally host people or dignitaries from outside of the municipality, so we're recording zero as a hospitality expense this year as we did in the prior year. This is a new note, the PSAB budget reconciliation. We prepared that in anticipation of the new conceptual framework where the municipalities' budgets must also conform to the new statement standards effective April 1st, 2026. It notes that the District of Lunenburg prepares budgets for spending control, revenue rate setting, and calculating a property tax levy. The budgets include interfund transfers and do not include amortization costs. The adjustments in the note reconcile the operating budget surplus, which we had at the beginning of 2025 of $27,000, to the consolidated surplus presented under the Canadian Public Sector Accounting Standards. Moving on to the trust fund. The trust fund financial statements are, this is on page 54 of your package, excuse me. The trust fund financial statements are prepared in accordance with the accounting standards for not-for-profit organizations, not PSAB. This determination was made by our municipal auditors based on the nature of these non-consolidated funds. The municipal trust fund includes funds that have been entrusted to the municipality. There are burial funds in the amount of $35.97 held for 3 residents of Riverview Enhanced Living, or now Balsam Care. School lands and trust in the amount of $26,227, representing municipalities' land interest for New Germany Regional High School and Parkview Education Center, and $1 million for funds donated by the Lunenburg County Community Fund. The Audit Committee must also review the municipality's compliance with statutory and regulatory obligations within the committee's area of responsibility, reviewing the audited financial statements and annual budget variances. Expenses for reportable individuals and hospitality expenses meet this obligation. As well, staff can report that all mandatory reporting to the province, which includes our annual expenditure report, capital investment plan, and statement of estimates, have been submitted before required deadlines. The financial information return has not yet been released by the province. It is due on September 30th. However, we don't have it to fill out. We've been notified it has been delayed due to technical issues. So that September 30th deadline will be extended once the report's available. Staff will certainly ensure that it's submitted by this revised timeline. And that ends my report on your financial statements.
Okay, so do we have any questions, comments, concerns for Ms. Wenzel? Mayor McLean-Weil?
I just have a question, if you could explain. It's on page 36, which is around the Lunenburg County Multipurpose Center, the financial position. Can you just explain the financial assets versus the non-financial assets there?
What page was the agenda? I'm sorry.
It's 36.
Oh, 36.
Or wait, yeah.
That's okay.
It says page 14, but it's page 36 of the, must be of the statements. It's note 3.
Oh, okay,
Yeah,
sorry.
sorry, yeah.
No, it's okay. I just want to make sure that we're all on the same page. That's okay. So note 3 is the financial position, of the Lunenburg County Multipurpose
Yeah.
Center?
Yeah.
Yeah, so these are taken directly from the notes from the LCLC financial statements. So I look at, we take their financial assets, which that's their tangible capital assets. No, that's not. Yeah, it is. Their assets and their liabilities. So that's just right off their balance sheet. And their tangible capital assets are the 27 million. So the financial assets are cash. They'd have to be cash and investments.
Does that answer your question, Mayor McLean-Weil?
So the non-financial assets, that relates to the capital?
That's their
the
capital.
actual infrastructure of the building?
That's
and
exactly
equipment?
right. Yeah.
Okay, okay.
Sorry,
Okay, any other questions, comments? Okay, so we're looking for a motion. Oh, sorry.
Yeah.
Oh, go ahead.
And those numbers should directly relate to the TCA schedule and the balance sheet of the LCLC that the board would have received on last Thursday night.
Okay, thank you. Go ahead.
Maybe it's because I'm new, but the tax sale surplus account and the reference to the 20 years, can you just explain what that means? And
Sure. When we go to tax sale, we will recover monies more. Usually we recover more than what's owing on the account. So if the tax is outstanding and any legal or fees that we have, we recover those. And if the bid is more, then we have to hold that in what we call surplus. And that surplus account, per the MGA, we have to hold it for 20 years. So within that 20-year period, anyone with an interest in that property can can apply to the Supreme Court of Nova Scotia for those monies. So they're really not our monies until the 20 years have expired, and then we would bring it into income.
So it becomes a rolling number? Okay, all right, thank you.
Okay, any other questions? Perfect. Deputy Mayor Vino, are you prepared to put the motion on the floor?
Certainly, thank you. To the Chair and members of Audit Committee, I move that the Audit Committee recommends to Council that Municipal Council approves the Municipality of the District of Lunenburg's financial statements for the year ended March 31st, 2025, and I so move.
Thank you. Seconder, Councillor Bell. Discussion on the motion? All those in favor? Motion's passed unanimously. So that brings us to the end of the agenda, and meeting is adjourned. Thank you.
Thank you, Paul.